All right, good morning, everybody. How's everybody doing on this fantastic Thursday morning? We're gonna take a look at some assets here this morning to see if we can't find ourselves a setup. So when I left you on Tuesday morning, we had a short position running. The short ended up hitting targets at 2 p.m. Eastern Standard Time, so it would have been sitting in that position for a while if you did indeed take it. As you can currently see right now, Bitcoin today is trading as an inside day. So we're trading inside of yesterday's range. We had initial jobless claims. The data came out actually bullish for the dollar. You can see there that you were below the expected 205. Higher than 205 would have been expected negative. But you do have the ECB monetary statement, policy statement, and rate decision coming up. 3.5% is expected. That is a half a point. But, a lot of people are saying that they wouldn't be surprised with all the bank stuff that's been happening if Lagarde they only hike 25 basis points. So I think essentially the euro will be driving the dollar move today. So we're going to put the euro up on the screen here. We don't know how that would affect the dollar. Euro has been trading in a range for the last 4 weeks. You can see here once you closed under your yearly opening range, 1, 2, 3, 4, you've been consolidating for 4 weeks, essentially under the yearly opening range. So since your weekly open is right there, you can basically see how that ended up acting as resistance coming into this morning. So basically what we're looking for is if the euro decides to like the news, you'll see a spike in it, then potentially Bitcoin being structured more, looking for the high of day currently, potentially get that spike to the upside. We have daily resistance sitting at 24,762. We have old hourly res at 24,695. And then the weekly resistance way down there at 24,316, which is also the current point of control for today's volume. S&P 500 down on the day. S&P 500 been struggling to get any kind of breakout and move away from 38.45, which is your yearly open. It looks to me like it is trying to break down. Now, we have not seen Bitcoin correlated to the S&P 500 at all this week, or really even last week, as Bitcoin had a tremendous move to the upside. Now, typically, I do not like being a buyer at the highs, and that is exactly what you would be doing, taking a bullish position in this area if you were to take that bullish position. All right. You can see volume is building up here. So it could end up ultimately being a short, looking for low of day and potentially taking out yesterday's low. But to me, it looks structured more bullish than bearish. But that's not a very big range day. So it would not take much of a move to push this thing down to the low of day. So naturally, if you're still in the short that we set up there from Tuesday, I think you hang on to it as you haven't made a higher high since. On the daily time frame, you've been making lower highs, and you made a lower high today as well. So we're going to see what happens here. The decision should be out. And they went ahead and did 3.5. So how is the euro taking that? So they went ahead with the 50 basis point rate hike. Bitcoin is not taking it good, but pushing down to this is what we would want to be a buyer at. So if support does indeed hold there at 24,695, we could look for bullish entries and we could target the high of day. This would be support on an hourly closing basis on the euro, right there at 1.05878. A push down into, that has you lower, but let's see how this thing reacts. Already S&P coming off the lows a little bit, but not much, but are nonetheless spiking to the downside, thus giving yourself a fresh daily low. This is the area we want to see hold a support. So roughly right in there. You got a beautiful tick right there. And then risk, I would just throw the risk under the support candle. It's wick low. So roughly 24,625 for the stop. So the setup would look like this. That's what your setup would look like if it were to play out. Because you're trading mid-range, right? Daily range. You're trading right in the, like, almost the midpoint. So open sets low, opening of the daily range sets the low of day, then the London session trades higher, and then you get another impulse move up. So we're kind of waiting to see this thing's going to hold support or not. As of right now, it's not looking great, but it's not looking terrible either. If you've already taken the entry, it looks like you may be getting close to being stopped. If you do get stopped, do not chase price and re enter. So we want to wait and see if it gets back above this area here, thus giving us a place for risk. Lows, fresh low of day coming up. We got 10 minutes on the New York Open as well, so keep that in mind. 10 minutes until you have the Open. There's no point in fibbing this range. We know the midpoint is roughly in here. So we know we're getting a midpoint test of the daily range. We are trading down to that last hourly close. Ultimately, this would be a support breakdown, a close under that. Fresh low of day on the S&P 500, under support on the euro. Bitcoin struggling. $37 on the close of this candle. So basically what I mean is like a close under that is going to look negative, not bullish. Ultimately, we want prices to get back above there, back above this white line here. The reason, I mean, you could buy the support, but right now it's not showing us the ability to hold support. I would have much rather seen it hold support up here. Plus, if you look over here on the euro, it's just structured bearishly, right? When you consolidate for weeks and are unable to get any kind of bullish momentum above the yearly opening range and then have a fallout like this, it does look more bearish than bullish. But like I said, we're not really comparing or looking for correlation on the euro. We are more or less watching Bitcoin and how it reacts to its own support and resistance levels. But I do want to watch the euro. So Bitcoin is now back above that for a split second, 5 minutes. This could be a retest for a lower push. There is no short to take here. The short would have been on the highs. And there's no way I would have shorted this with this structure. Right? So that would be, now that you're back above, your stop loss would be 24,591 under the low of this candle, taking the entry because you're back above resistance. There was a 5-minute closure above. So there we go. Position would be entered. Now we just wait and see if we get stopped out. Anything under that is going to be a stoppage. Long trade targeting resistance 25022. Good mornings, good morning, good morning, good morning, everybody. Good morning, good morning, good mornings. All right. So on the Bitget platform, which is the platform I use, the resistance would be 24939. So I would want to take profits around 24, let's just call it 24905. Obviously, that price is different than on Coinbase. But we'll know briefly if we're right or wrong here, because the market's opening in 3 minutes. If we're wrong, we'll get a spike back down. $25.11. Let's get the exact price. 25018. Right in there. That's where we want to take profits. And you would take whatever you take, right? 70% if it gets up there, of course. If it gets up there. 70% of the position and close it. All right, there. It is situated. I have a bunch of trap beats, Johan. I switch it up every now and then, you know what I mean? Not everybody likes listening to trap beats. I like them, but not everybody does. So we just we don't have a theme song, if you will, here. I just play random, whatever I feel like playing. Thoughts on the SPY today? Well, right now it's making fresh low after low, but you're 1 minute to the open. It looks bearish. There is the open. It looks bearish. You have a bearish day. Will that change? I don't know. You're still trading above the yearly open, but you're making lower highs There was a spike down to make a fresh daily low. So if you are going to move up, I would want to see this area hold on a closing basis, on an hourly closing basis. We don't really see a whole lot of new volume coming in here. There's a slight spike in volume, but not much. Volume by price, volume by time. It's really hard to get an analysis using volume by time. Obviously, you would have to be on the 1 minute time frame to watch it to see if you're actually climbing to indicate that reversal. Because as of right now, you're trending lower, right? Like the last 3 hours, you've been trending lower. So for the last 3 hours, the sellers have been in control. What we would love to see is a spike in volume, obviously a green spike, and a spike in price up. This is daily resistance. So if you are looking for shorts, you could base your scenario on that. Right there. And if you are looking for shorts, if you are bearish and you do want to take a short entry based off that, I don't know where you're going to put your stop. I could see one using this as a potential risk mitigation. Target would be daily support. So your position, your short position would look like that. Um, Something like that right there. That actually looks like the better setup now that I've had a chance to look at it. Yeah, it does look like it would probably be a better setup. Than this setup over here. That's the thing with trading. No matter what the daily looks like your current daily structure, even though it looks bullish It does not mean that you're going to see a bullish day when the New York session opens. I mean, everything screams bullish on today's setup as far as the way price is trending, where the point of control is, where the daily high is, the fact that you did not take out yesterday's high when you made this initial run. So to me, the structure looks bullish. So I would take the bullish trade. But the thing is you got daily resistance right here. And too often we have seen those levels act as massive resistance. And also, but the hard part is, where do you put your risk? I mean, that's just a previous daily resistance. And of course, you don't take it on the first touch, right? You wait for it to get back under it. So you could allow price to set in that stop for you ultimately before taking the entry. So there you go. You got the long setup is long gone, right? It's over with because this is was the entry. If you didn't take it and you think Bitcoin's going lower based on the fact that the S&P 500 looks like it's going to go lower on the day, then take the short. I mean, you're fighting against the trend by going short, the intraday trend and the multi-day trend and the weekly trend. The weekly is bullish. A pretty big bullish candle, but by looking for the short, you can see you're not looking for a massive move, right? You're just looking to trade inside of the range the market has already put in place. If you took the long entry, you are better than 1-to-1 as of right now. So if you wanted to take some profits and move your stop, you could, to mitigate the risk, since it is struggling and since we are into multi resistance levels on the daily. Probably wouldn't be a bad idea. Daily res, daily res. If I had a short bias, this is where I would be looking for my entry. But ultimately, you want to see price show you the willingness to trade away from that level. That's why this one would be your entry, to show you a clear rejection, show you that sellers are in fact selling. Your indices are not down big. They're just barely down. Notice the struggle. I mean, it's so freaking big because I did it on the daily. I can't even see. It's obviously way more than a 2-to-1 risk to reward. So maybe you could aim for there and instead, like 24, 480. That was a big spike in volume down there. So you would need a pretty significant amount of selling to come into the marketplace pretty quickly. That's why I don't use volume by time. I use volume by price. But neither one of them, like I said, ever, no indicator. There's nothing in the world that is going to guarantee anything in the market. All you can do is manage your risk the way that we have done this morning here. Remember, if you are short side bias, you are still waiting. You have not taken the position yet because you haven't seen the rejection. You haven't seen the sellers show up yet. It looks like they are, but they haven't yet. And then for you long trades, this is kind of not what I want to see, right? Because we know that this is daily resistance. Both of these are both daily resistance levels. So, yeah. It's more in line what you want to see. And then, like I said, you will have a risk, a place to risk then. Typically, we don't take longs into resistance or shorts into support. This is not a reaction I like. We're 15 minutes into this. All right, so you shorts would be throwing on positions right now. You would be marketing in short. Your stop would be right there, that wick. This would be your take profit. For the longs, it's not looking good. For now. These are getting bigger. These numbers are getting bigger. So that means the drawdowns are getting bigger on risk. So I would probably, this safe bet would be to maybe, like I said, take half of the position, close it right now on the long side, and mitigate your risk. Since we're getting a slightly bearish reaction at daily res. It's not a massive bearish reaction. So it is choppy. It's not a definitive, like, oh yeah, I'm closing it yet. But it's looking more and more like it. I would want to see this candle engulf that bearish candle. If it doesn't, I am going to close half the position. Because it's looking more and more like a short setup. It Go on, go on, go on. Push. That looks good. Looks better. We should get some stoppages here on the shorts. There we go. That's what I would want to see right there. Beautiful. Look at your hourly on the euro, how it has completely changed. But still struggling at that daily res. Oh man. Perfect example why you don't get long into resistance and you don't short into support. Notice the lack of volume on that push. It is not far from hitting take profit, but still so far away. So close, but so far away. All right, so I'm going to mitigate my risk right here. I'm going to take some profits. I'm moving my stop to break even at 25% gain on the trade. It's better than 2 to 1. So, you know what I'm saying? Why be greedy and try to get a 4 to 1 out of it? So you can mitigate that risk by taking 70% of the position off at like 24.9. If you drop back under 24.891, set it at 24.891 and then bring your stop loss to break even. And then you're protected. No matter what happens from there, you're good to go. Your P&L has went up and you still have a small piece on for any, if you get any bullish continuation. I'm sorry, terminal sandwich. How do you set up multiple instances on the same ticker? I took the long trade. I am not long and short. Okay. I set up the long. We had a long bias. The long is the trade that I took, the one that I was liking the best. The fact that we have 2 daily resistance levels really close together here, I was just saying, if you have a short bias and you wanted to take a short, that's essentially how I would have played it. This is the trade that I took. But on Bitget, it is possible to take a long and a short because you have 3 futures sides of the platform. You have USDT side, you have the coin margin side, which is an inverse contract, and then you have USDC futures. So you could take a long on the tether side and then turn around and take a short on the USDC side. So it is possible, but it's not possible to take a long and short on tether, or it's not possible to take a long and short on USDC, and the same goes for the inverse swap, right? You have to split it across multiple assets. And you can make money doing it. I do it all the time, right? I always leave one of those accounts open for short trades. But right now, like the inverse swap contract is tied up in a Bitcoin long that I've been holding since 16,530. 16,540 is the actual entry, and I'm just holding that position. But for intraday trades, I use USDC and USDT. So if I make money on the profitable trades, I can then convert that USDC to more Bitcoin, or just take the profits and transfer them back into the cold storage wallet. Only keep an amount of money on exchange that you trade with, right? That's it. Like, I leave a little bit of spot. All three of those, I have spot on the platform, because that's how I move it in and out. Once the spot grows to a substantial amount, I will then either convert that to Bitcoin and move it off exchange, or if something happens, a forbid, like a black swan event, and I'm not on the right side of the trade and I'm way too heavily leveraged and I lose the entire amount on the futures platform, then I can re-up by just taking more spot and throwing it back into the futures trading platform. But I never allow the money to be a substantial amount, because of the leverage that you can use. So essentially, like, I'm always moving assets, but never converting them to USD. Just leaving it in cold storage and what's on the platform. So, like, if Bitget were to close up shop tomorrow, then I would lose a substantial amount of money, but it's not going to hurt, because the majority of my funds are in cold storage, right? And that's how you are supposed to do it. It would hurt right now because, like I said, there's a substantial amount of funds on the exchange. Again, if you are a profitable trader, you'll notice that the growth on all three of those spot holdings gets bigger and bigger and bigger. Once it reaches a certain amount of money, I then just pull it right into cold storage. But I always leave a small amount, like $1,000 USDC, $1,000 USDT, and something like that. $1,000 worth of Bitcoin. And then I let the account grow to where it's got about 15, 16 grand in it again. And then when that happens, I convert it back to cold storage and reset the account. So that way while I'm in equity growth, when I'm growing the equity, obviously, then that's when that's when the risk is at its worst possible time, right? While it's growing, or being in an open trade for so long. Because like I said, that inverse swap contract trade has been open since the first of the year. So I've been sitting in that position for 3 months. Another reason why I say, don't always try to overreach for your goals. Resistance was way up there, but 2-to-1 risk to reward. If you can get a 2-to-1 risk to reward out of your trade, lighten the load, take profits, because we can't see into the future. We don't know what's going to happen. You have to learn how to mitigate your risk. You have to learn how to manage your trades based on either what you see going on currently, because you don't know what's going to happen. So right now the position is still hot. There's still funds on the account. Those are unrealized gains. I've already booked the gains for today. So looking at the P&L, it's bigger than when I opened the position. If you calculate how much you have in unrealized P&L, you want to make sure that also still shows that you do have, in fact, growth on the equity. Otherwise, you're over leveraged and the fees are killing you. That's the thing about crypto trading on some exchanges. The fees are literally so bad. If you use high leverage, you would need a 20% return on the investment just to break even based on the fee structure. That's not good. You know what I mean? That's not good. Like a 20% return is a massive return for a single day trade. In Forex, I'm doing it like I am always only risking 1%. So if I take profits on a 2-to-1 risk to reward, then obviously that means, yeah, I'm making a little bit less than 2% when I close down the trade, because I always leave a small portion of the position running for any continuation that may occur. But Bitcoin being up here at resistance, man, I mean, that short is still valid. If you took it when I said to take it there and that was where you were risking, then obviously you were stopped out on those 2 5-minute candles there. It got you. That's how it happens. That's usually how it happens. And also on the long trade, notice how it did not get to resistance. It didn't make it up there, and you're starting to see rejection. Now, the euro support so far is holding. Even though you traded well under it, you still closed back above it. So the long on the euro is still valid until you close under this level. If you close under the level, then you scrap it. If this wick did not get your long stops, right? Which me being a day trader, it would have. I didn't take the trade on the euro. I was just basically trying to set up a Bitcoin long and a Bitcoin short. I let you decide what you want to do with your own biases, with your own judgments. But I took the long, and I have de-risked. It was much better than a 2-to-1 risk to reward up here. So why risk it? I don't want to be stingy. I don't want to be gambling to try to just get that extra little bit of profit. You know what I mean? Because I can't see into the future. 2-to-1 is all I ever seek. That's all I ever want. If I can see potential for a 2-to-1 or get into a 2-to-1 and then you get something like this, right? Where it like completely ultimately reverses and you don't get something like this, then I have to vacate the trade, because this was the expansion. The expansion took place already early this morning. You see what I'm saying? The actual trade, the best trade for today's range, took place at 5 o'clock in the morning. So when I got to the desk, it was too late, because I usually get to the desk around 6:30. So I have to work with what I have. A lot of chop. Still structured bullish, but a lot of chop nonetheless. You have to learn how to manage your trades. You have to protect your equity. Without that money, you can't trade. So protect it. It may still get up there, right? If you look at Bitcoin on the hourly, this is what took place. You set in support above the level that we wanted here, as that was the last resistance. There's the breakout candle. Here's a continuation candle. So what we were looking at here is a pullback to what used to be resistance. It pulled back deeper, but that's okay because it allowed us to get in a little bit lower, which made the risk to reward better. But notice how it closed. You closed back up here. So as of right now, this is support until you close below it. And your structure for the majority of the day, because 2000 hours is the daily open, you've been making higher closes. And your lows are also higher. You see what I'm saying? You've been making higher highs and higher lows all day long. But being that this is daily resistance, there is a chance that the sellers are building up here. Even though today's structure looks bullish, you're still trading inside of yesterday's candle. Which means it's a choppy day. You're trading as an inside day. Inside days are the hardest days to make money, because you don't get trending continuation. You just chop around inside the previous day's range. Yesterday, we did a live stream for the Discord, and let me make sure I say this the correct way. I made money because we were watching that resistance and this support, right? So I bought here and sold there. But then still set up a short from the same area because that's the operating range. Short, buy. There's the breakdown. Boom. So even though I was on the wrong side of the trade by being long, because I was only looking for my area of opportunity, the operating range, as I like to call it, it allowed me to still be able to get in and make money and get out. That was yesterday's setup. So today, you're currently trading back inside of that range. But what you've done is you've got new data. You've got daily close. There. Do you see how my operating area from yesterday is not into resistance? Right? Whereas today, the operating area is into resistance. This white line here is daily resistance. This white line over here is daily resistance. So that here and here is the operating range on the entire daily range. Now, we don't know where it's going to close. A close above would be fantastic for bullish continuation, but we don't know if it's going to close up there. And obviously, a close below here could set up short trades for tomorrow, right? Hopefully that makes sense to you. It's just, since your daily high is way up there, it makes it difficult to manage risk. It makes it difficult to find where is the stop going to be. And that daily high came from this right here. So that was the range. And you could see it beautifully how it was working its way higher. Dip, yeah, it probably looked bad, but where did it dip to? Right here. See? Right there. And then up. Set the high of day and you pull back off the high. This could just be a dead cat bounce. The short could be setting up still. I don't know if it's going to be a short. I don't know if it's going to close up here. I never do. My strategy does not predict market direction. My strategy is identifying the areas where the market's being made. And then I operate with inside of that area. I look for my entries inside of that. So I can still potentially make money even if I'm on the wrong side of the market. And is usually also why I'm done by 10 o'clock, right? Because your volatility literally at the most volatile times are the Asian Open, London Open, and New York Open. So on a 24-hour traded market, you got 3 sessions in each daily range. And those 3 sessions is where you get the most volatility. Volatility is range expansion. Volatility is just another word for range expansion. So those are the 3 times that you're looking for your trades. The reason I don't trade the Asian session is because it's the first session of the day. You really haven't had enough time to even make an operating range yet. So you're just shooting at the hip. Then the London session comes and sets the higher low of day, usually, and then trades away from it. Or you get continuation. So by the New York session, I pretty much already have a pretty good idea of the directional bias for the day based on which way is it going. But sometimes in the New York session, you do get full-on reversals. And on those days, if you're long and you get a full-on reversal, you're going to get stopped out. So if you trade all day, your short trade ain't completely busted yet. Because you haven't taken out this resistance. This is your daily resistance levels, but you're also looking for your intraday resistance levels as well. So like if this candle were to close underneath this candle's closure, then you could wait and see if you get a pullback into what we would call supply, which would be this candle's open. and potentially look to take entry there and put your stop above that. But you've already missed the majority of the volume. So what I mean by that, see how the volume is building at the price over here? Remember how small it was? This means a lot of volume is taking place here. There's a lot of people putting in orders here. Whether they're selling or buying, we don't know. But we do know that a lot of stuff is going on here. So by the end of the day, if one of these volume nodes gets stretched out farther than this one, that's going to be the point of control. And then whichever way price goes from there is going to probably set up tomorrow's trade. Like yesterday, based on yesterday's volume point of control, today's lower. So once price starts trading above this and this, that gives you a long bias. Anybody that's short from here or here is now stuck. So if they're stuck, then you can look for that rapid volatility or that expansion to come from stops being hit or triggered. Boom, 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 boom. And then you get your moves higher. So any fluctuation or volatile move you get now will be news driven or price will ultimately start to go look for demand or supply. But it's definitely choppy. We entered all the way over here. So, like, what was it? If we entered on this candle here, that's 925. We're currently trading an hour later, and we still haven't made it all the way to the target. Now you're still well above your entry, which is good news. If an hour goes by and you're still trading at your entry, I suggest you close the trade, which is kind of what happened to us on Tuesday. So what I did on Tuesday, I made money on the original long trade, but then I set up a short trade for anybody who missed the long trade and tried to walk them through it, but it just kept trading sideways. So ultimately what I did was I moved my stop down to break even, signed off, put the computer to sleep, went and make breakfast. After I got done eating breakfast, I came back to the office to see that I had been stopped out. But watching the charts all day, at 2 o'clock, there was an expansion lower, and ultimately it hit the take profit. So had you taken the short from Tuesday and you didn't move your stop, you made money. Now, seeing this right here, I probably would not be interested in even trying to short it because it's not showing you any kind of resistance or rejections at either one of those two daily resistance levels. In fact, they're holding support. You could look at it like that. Breakout, test of daily res, test of daily res, test of daily res. It's getting very, very close to hitting intraday resistance, which is this. And that is also why we got our target just under that. So if I put this one on the hourly, well, it's not just under that, but it should be. Always take profits ahead of the resistance or the support. Don't put it directly on it because you may not hit it, right? You may get front ran. There might be some big seller sitting there. But ultimately on the Bitget platform, it did hit 24,905 is where I have a dotted line for the target. And then the wick high on that, 24,899. So $10 short from hitting the intraday resistance or my take profit from the original long. But I had already closed out the majority of the trade at a 2-to-1 risk to reward. I didn't like the price action I was seeing. Usually I know I'm right really quick because if you're on the right side of the market, usually you'll get your pullback into the area or where you're looking for the entry. And then sometimes within 15, 20 minutes, boom, you're done. That's when you know you're probably more or less on the right side of the market. Expansion goes quickly, very quickly in some scenarios. Well, that's what we've been talking about the whole video, Mr. Clipper 70. I've been trying to walk you through this trade, telling you what I'm looking at. You got two resistance levels, and the daily levels are always going to have more weight associated with them. They're always going to either attract or repel price. Those are absolutely. Matthew Barber, Marlboro Reds. Marlboro Reds. Euro interest rates as expected. Yep. Good morning, Run DMC. Any chance we can look at the bull run from 10K to 50, 60K? Would we have been able to get weekly, daily entries then or left behind? You got left behind. I mean, I'm sure that I can find it in hindsight, but do you really want me to do that? I will. Absolutely. We'll go back in hindsight and look if there were opportunities. This trade, if you're still sitting in it and you haven't taken profits yet, you need to take profits and move your stop to break even and then forget about it. Whatever happens, happens. Right? All right, so specifically you said from 10K That's here. Right off the bat, I mean, a 10K entry was at 97.50. That's that gap. That didn't fill. But did you get a support test? Yes, you did. Right there. Entry at 10K. Would you have taken it? I don't know. And then would you have had the patience to wait a week later? Would you have held during all of that pullback? Or would you have closed it down expecting this to have downside continuation? But yeah, you got an entry there. And pretty much that was it. I take that back. You got another entry there. Support. Retest. And then massive expansion. So I see two places where we would have potentially been able to take entry. And then there's just no way in hell I would have been looking for bullish entries up here. Not for any massive continuation. But there were day trades taken up here for sure. Test. This was a complete and utter failure. At this point, I would have been looking for shorts. And then we did short this. We did short this. I was looking for that to be the blow off top, essentially. But then the B Word podcast came out and a bunch of other stuff, and boom, you had another run to the upside. But we did make money on that short. And we shorted it based on a Fibonacci retracement, right? We were looking for shorts in here. So obviously it was dropped down. I don't know if I can even go back that far. Yeah. This is daily res. We knew that we were looking for shorts based on the 6-1A retracement. Damn, I don't remember exactly where we positioned ourselves or how, but it broke right down through. So, I mean, yeah, I only seen like two or three areas where we might have been able to get entry looking on the weekly. This rally, when it took off, man, it took off. That's all there was to it. That's all there was to it. You got really close there, but did not test it. But ultimately, you did retest that. So we would have been looking at this as a trap based on that candle there. Because we broke down and closed under it. So we would have been watching this high. Once we took out that high, which we did on this candle, yes, this week we would have been looking for entries. And we would have been looking for them really close to that. And we got nice entry on the daily right there. Daily support right at weekly support. This is that weekly support. Look at this. That would have been our entry. Even though it's yeah, even though it's in hindsight, that's the way we trade, right? That's the stuff I'm teaching you to do right now. The exact same stuff. Find your levels and watch them. See, we currently have a weekly resistance right here that is very important. We need to close above this. That's where price stopped. The Luna collapse. Price stopped there. Now you're pulling back off of it. But there's a pretty high probable chance that your weekly low is in. So where do we close in regard to this resistance here? Another closure under is going to look bad, but it'll also bring in a lot more sellers, and sellers, especially levered up sellers, is what we need along with demand to fuel a rally. We need those sellers to be stopped out, and we need demand to push it. So just getting rid of that for the time being, going into the daily, you can see that you have those daily resistance levels. That one. And this one. So today, wherever we close today's candle is going to be very important. Like I said, have two daily resistance levels to watch here, real close together, and you're just above a weekly resistance level. So I'm still bullishly structured, still have a bullish bias because we closed back above the 21. So on a trending basis, your trend is still up. Your trend is still up. See, the problem with people is what I'm finding, especially with a lot of newer traders, is they're having difficulty identifying trend. They're having difficulty identifying trend because they're looking at too many YouTubers and Twitter guys who all have different biases and whom none of them are probably real traders even. Target was hit. There's the hourly resistance we were looking for. There it is, right there. So the bullish trade worked. We already know it worked. We already made money. But there you go. Boom, my profit target was hit. I said today looked structured bullishly. I liked it. Structured bullishly. That's why we wanted the bullish trade. And I said that at 8:56 in the Discord that I would be targeting the daily high, which is here. But everybody in the Discord knows that I'm targeting resistance before the high of day. So I would be expecting the high of day to be taken out. Not expecting it, but kind of, targeting it. But this would be my area to take profits because that's the last highest bullish close. That's resistance until you close above it. And it's all because the market is structured bullish, not bearish. I don't understand how people can say that this is not bullish or that weekly is not bullish. This guy's the world's worst. Did he already? He tweets so much. Yeah, he's already deleted it. Yeah, he already deleted the post. No, there it is, right there. This is not bullish. Um, if you're looking at from this high to here, no, that's not bullish. But if you're looking at from here to here, yeah, it is bullish. You're moving higher. Your chart goes from bottom left to top right. That's bullish. So you just need to learn how to identify trend. Well, let me simplify that for you. Get on a weekly, put a 21 exponential moving average on there. If price is under it and making lower lows and lower highs, you're trending bearish. If price is making higher highs and higher lows above it, price is bullish. Now, the real way to identify trend, the way professional investors do it, is they look at the year-to-date chart. This is your open. That's Sunday the 1st. That is your yearly open. Is price above that or below it? It's above it. You're bullish. You're moving in an upward direction from the yearly open. That's two ways to identify trend. The correct way to identify trend. Like a professional. All right, not like retail. If you're retail, you're still thinking you're in a bear market. Well, you have a whole new year. So you have all new data. Year to date, Bitcoin is bullish. I can prove it. There's your 12-month chart. You're green, dude. On the year, you're green. On the quarter, you're green. On the month, you're green. This and this is a bullish signal. That's a bullish engulfing candle. You took out last month's low and you took out last month's high. If you close bullish in 15 days, if you close green, that is a bullish engulfing, also known as an outside month. That is a bullish signal. Now, if you're looking at the monthly 21, then obviously you're still bearish. Right? But the monthly 21 is going to make you late on trend identification. I bought the very first day of the year because I know that trends often change at the start of a new year. Not always, but often. And we were sellers because here's 2022's yearly open. Here. And I posted this on Twitter, that these two swing highs was our target And if price could not break out and trend away from 46,205, we would be bearish. We would be selling this because all year you were under the yearly open. I even had a chart drawn up and everything, and I posted it weeks in advance. We posted this long trade here, and we said this was our target here. So we made money from here all the way up to there. Then we focused and waited as price showed us, literally gave us a supply and everything to be a seller. And then boom, 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 boom. We shorted up there. Like, it's not as hard as people make it. You need to learn how to identify trend. The best two ways to do it, start looking at year-to-date chart, because trust me, the only people that care about last year are the people that haven't paid their taxes yet. Professional hedge funds and banks and stuff, they operate on a year-to-year, quarter-over-quarter, month-over-month basis. They do not care what happened last year because it happened last year. You can't go back in time and fix your portfolio to make money last year. Either you made money last year or you didn't. Well, it's a new year. So now you have a new opportunity to either make money or not. It's a very confusing year, I can tell you that. Because the Dow Jones was bullish, it is now bearish on the year. Yearly open, traded above it, sideways, broke down below it, came back in, tested yearly open, failed. You have made a fresh 2023 low just yesterday. You are trending bearishly. Weekly, where's the 21? There's the curve, there's the breakdown. Now you have a different slope even. So any push back up into 33.36 is going to be met with heavy selling. People are going to be looking for bearish trend continuation. Will they be right or not? I don't know. But if price gets back above this area, then I would switch my bias on this asset. So what I'm trying to say is this is why you have so many different biases right now, because assets are usually, these assets trade in lock and step with one another. If one is bullish, then the other is. S&P 500, 2023's open. Set a yearly high, you came in, you set a yearly low. You're now under this 21. So for now, we're still bullish on the S&P 500, but that bias is, that narrative is slowly starting to shift. If the S&P 500 breaks down, then we'll be looking for selling opportunities. We'll be selling swing highs and in anticipation of potential fresh lows. But as of right now, it's still a buying opportunity. As of right now, right? Because you are still trading above the yearly opening range. Same goes for your NASDAQ. NASDAQ's looking great. Last week looked bad. This week, however, looks good. And then here's your yearly open. So you can see that on Bitcoin you're bullish, on NASDAQ you're bullish. S&P 500 is questionable, and you're bearish on the Dow. Oil is bearish. Oil's bearish. Not only are you below 2023's yearly open, you are also below 2022's yearly open. And your weekly 21 is what? Trending above, price to the downside. So what you need to be doing on oil is selling rips. Any pushes higher, you're looking for resistance or old support levels, and you're waiting and watching for resistance to reveal itself and looking for bearish setups on oil. USDJPY. We're back above the yearly opening range, which started to look bad for my short setup. My short's all the way up here, so I mean, I wasn't worried about it at all. In fact, I expected this to be a trap. And as of right now, it looks like it was, in fact, a trap, or also known as a selling opportunity. Now, what I'm expecting longer term on this asset is simple. It's not going to play out this simple. It would be nice if it played out this simple, but it's not going to. It's probably going to be choppy. But that's what I'm expecting, or that's how I'm positioned for something like that to take place. Right? You traded into monthly support, you got to bounce. That is normal. That's common. It's monthly support. Monthly support is big. You did not bounce at this one, though. You busted right through it. Boom. Boom. So I expected a pullback. Here's your pullback. So now what I want to see, obviously, is for the next couple months for price to get back under 131, 101, get back under the weekly, which you are under as of right now, the weekly 21, stay under that. And then any rips or any pops up into resistance levels will be opportunities to take new short entries. But in a sideways, choppy environment, it's difficult. Not everything is as clear cut and clean as a couple of these other assets are. You see how you traded? This is your yearly open here. Traded under it, above it, under it, above it. But look what you're doing each time. Each time you're doing what? Well, to be fair, you did not liquidate that swing low, so never mind. Ignore me. But you can see, like, that's choppy. That's choppy. This looks like a bull trap. But as long as you're trading above this, you still have to kind of give more weight to the bulls than the bears. You break down and get under this on pound yen, then this will change its slope and direction. Then you will be looking to sell weekly swing highs, preferably at resistance. And then maybe, just maybe, you get in a trend that lasts the rest of the year and you're trading down here somewhere come, December. Technically on Bitcoin, you can pull back all the way to here and still be bullish. It wouldn't look good and it would be scary to be a buyer if you did get all the way back down here, but I would still be bullish. I would still be buying it. When would I quit buying it? Well, if you break down below this and this gets a negative slope and just continues to make low after low after low, right? Then we start to sell rips like you did here. Sell it, sell it. A good indicator to look at on a daily time frame is the Bollinger Band, but don't change it. Just leave it set on the two standard deviations. Because typically when an asset is directionally biased, you can see how like it stays above the midpoint with these occasional traps. This trap lasted for 2 weeks ultimately, but now you're trading right back at the upper edge of the Bollinger Band. This is not a buy sell indicator. It's to show you expansion and volatility. That's pretty much it. Like we use indicators to show us when something is very momentous to the upside or to the downside. And to me this looks bullish. And if it does break out, there's a good chance that pullbacks will only pull back as deep as this. You can go back and look at in other trends and see it. Like there's the breakdown, then there's the shift on the upper bands where you're literally lower bands aiming lower, upper bands aiming lower. Notice how you had difficulty at the midpoint, 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 midpoint. Those were all fantastic selling opportunities. Same scenario here. Yeah, you're trading sideways. Yeah, you probably got stopped out. But if you give yourself patience and time and understand that it takes a few days sometimes for these setups to truly reveal themselves to you, then you do ultimately end up getting phenomenal signals to sell. Look at that short on a very bullish day. Right? and you would have been bearish because the 21 exponential on the weekly would have been somewhere in here. I mean, you can use indicators to help you get the bias, directional bias, but I suggest you use just the 21 on the weekly and the year-to-date chart. Anything else, as far as biases goes, or as far as trend identification, is useless. A lot of people haven't, there's so much money on the sidelines right now because they think Q1, which we're still in, is going to be the fake out move. So if Q1 is going to be the fake out move, we start a brand new quarter in 15 days. Then you're going to be wanting to look to be a seller around 26,553 after the new quarter opens. So if you think this quarter is the fake out and the next two quarters are going to be recessionary or bearish, and you're looking for a downside expansion, then you're going to be looking for shorts up there. And we'll see, right? We'll see how it plays out. I may take a short up there to kind of hedge off that long position just in case it is. But, like I said before, I know trends, they usually start around the first of the year. I mean, that was a nice trend. So that's Saturday, January the 1st. January is the start of the new year. There's where your year closed. So literally, you could have just almost sold the high of the year. Boom, boom, and made money. One trade, one all year long. Am I looking for this to be one trade all year long to the upside and fresh all-time high? No, I am not. I'm looking for this year to be sideways and choppy because the halving isn't until next year. Next year, if Bitcoin stays on its current 4-year cycle model, then next year will be the year that you're looking to buy the yearly opening range and hold on, because the halving is typically when this thing gets bullish, right around it. I have a halving chart somewhere, and then we'll wrap this up since the trade's already happened. Let's go weekly. Let's go log. So there you go, right? Market cycle peak, November, bear market. Once you set your bear market lows, you traded sideways to up all the way to the next halving. This was the halving. Then you got your bullish market cycle. Same thing happened here. You peaked out in December, November, December. Bear market lows. Sideways into the halving. After you halving, rip. So if that's going to continue, set here, bear market lows, sideways, halving, Rip. So you have time. You still got a lot of time on Bitcoin. I'm not looking for fresh all-time highs or fresh all-time lows on Bitcoin. I'm looking for sideways to up, and I'm waiting on next year's halving. But in the meantime, I'm going to accumulate as much Bitcoin as I can. But I'm doing that by trading. So I am not risking any of my money by buying it. I'm not buying it. I'm not using my profits to buy Bitcoin on Forex and stocks, right? Any crypto profits will hang on to them and accumulate Bitcoin that way. As that's how I'm mitigating my downside risk on what is a very, very volatile asset. Can you use hedge mode on Bybit USDT? I don't use Bybit. I've never used Bybit. Got to bolt. Yeah, we're wrapping it up. Um, nice. Um, how do you validate your entries on a lower time frame? I'm not sure what you mean by that. Typically, I know if I like an asset or like a position or a trade as soon as I look at it. Like, all I do is I have a main watch list that I look at. I'll look at the main watch list real quick. Then what I do is I go into Forex right here, and then I look to see if there are any opportunities in the Forex market because I'm a Forex trader more so than a Bitcoin trader. I trade Forex more. Um, if there's position and or if I see a setup I like, I take it, and then I get everything situated for the Bitcoin trade if there is a trade on Bitcoin. And then the same goes for stocks. After the market opens, typically I'll look at the hot list, see what's trading, what's got the most volume, see if there's any high flying penny stocks, stuff like that. If there is any high flying penny stocks, is it something I feel like trading or not? Also, I have, I hold long term stocks, I trade options. So I'm just looking for opportunities across all three markets. And like the way that I trade, the style that I trade, I can pretty much look at an asset and know within 5 seconds if I see a setup or not. If I don't see a setup on anything at all for that day, I don't trade. I don't force the position. I don't force anything. Just fly through them. We got a lot of stuff going on. It's still the beginning of the year, still Q1. Things are still lining up. I try to stay away from New Zealand and Swiss franc pairs. simply because they're so choppy and spready, usually. But I am paying attention to USD Swiss franc right now because I think this thing's getting ready to roll over. Right? Trend is clearly down. Here is the opening of the year. This looks nasty. So ultimately, I'm kind of just sort of looking, watching, waiting for a setup. I didn't see a setup on it today. Because by the time like I said, we were here. I can't short it into the yearly open because that could potentially be support. So what I need this thing to do is I need either wait for it to get up here and create a daily resistance for me to short it to aim back down this way, or wait for it to break back down and then look for daily or weekly resistances to sell into it. But if the USD continues to do what I think it's going to do, which is roll over ultimately, then I think this could be an asset to absolutely be on the lookout for. Just like USD/JPY was a good one. I think this one ultimately could be a good one too. Now, as far as gains goes, you can see this thing has been in a big range for a long time. A big range. So ultimately, I'm thinking like a breakdown. I mean, this thing's been in a range for years. A breakdown below 87, you could see it get as low as 70. A breakout above 103, you could see it get to 110, 120. Ultimately, if it breaks out of this range, I'll have a long-term target of this or a long-term target of that. And there's a lot of pips to make either way. But it's as long as it stays under the yearly open and closer to down here, then it's going to look good for the breakout to the downside. But that is a massive support. So it's not going to break. I'm not expecting it to break down through there on the first attempt. So I think there's going to be multiple attempts to try to get into this. And ultimately, there's, in my opinion, quite a bit of moves or quite a bit of room to the upside and to the downside. Look what happened when USD/JPY broke out of its range. I mean, this thing was range bound as crap, right? And for a long time, when it broke out, it broke out. But typically, these things are Very choppy, especially this one. It is directionally biased to the downside, always. It's like just wait for resistance on this thing and sell it. You know what I mean? We got two areas to look for potential entries here to sell, but it's so spready sometimes and choppy. Just, yeah, that's how I do it. You guys have a fan. Also, is the setup you mentioned always at the New York Open? Yeah, I don't. That's the only time I traded. I'm looking for entries roughly around 7 a.m. to 10. 7 to 10. Very rarely do I take a new entry after 10. If it's in the stock market and it's like a long-term spread options trade or something like that, that's different. But for a volatility play like I did on Bitcoin this morning and the volatility plays that I'm looking for in FX, I'm done at 10. I'm not looking for new setups in the FX market after 10 o'clock. After 10, I'm done. Usually, I'm done trading for the day after 10. Even on the low cap penny stocks. I mean, those things, which I don't suggest anybody trade because they're so volatile, but just like cryptos are, you lose a lot of money really quickly. But usually the big move's done, right? The big move's done 10:30ish. It's over with. Then you just chop sideways the rest of the day. You might get like 35, 45 minutes at the end of the day where you get another explosion in volume. But to me, I don't want to be holding anything overnight in the stock market. Anything that I can't close, that I'm not holding it overnight. Not for a day trade. If it's a swing trade, that's different. But I'm not holding any day trades in the stock market overnight. So if I don't get in a setup or see the setup or miss the setup, then I just don't take the trade. You only need to be able to make a couple percent per week, man. If you can do that consistently, you're gonna crush. You're gonna crush it. You'll absolutely crush it. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.